Welcome back to Small Caps, ladies and gentlemen. I've got him back, Tony Locantro. Sorry about that. Couple of weeks I didn't have him on. I was away. Apologies. Tony Locantro, Alto Capital. We always have a good chat about what's happening in the markets and what you, our gorgeous community out there, should be doing and should be looking for. Tony, great to see you looking terribly smart there.
Well, it's the death of the suit, isn't it? I'd hate to own a dry cleaning business. I guess the way to launder money would be a frozen yogurt shop, maybe. I don't know, but anyway. But I love what you're wearing. I took my son to Superwog on the weekend. You look very esche. People
What is
have
that?
to Google that.
I'll go. Okay. Well, it's my Connie thing, direct nickel Connie. So yes, I am a little bit relaxed, Tony. I've come back from being away, and all those people that said travel is a pain in the neck and it's crazy and your flights will be cancelled. Everything was fine. The only thing was leaving Australia, no mask, no worries, very relaxed. Coming back to Australia, put your mask on.
Yeah, it just looks like a real shit fight at Sydney Airport at the moment. So I guess you went to Florida. So yeah, probably a much easier path.
I didn't find any issues when I was leaving Sydney at all. But anyway, there we go. What's been happening since I've been away?
Well, the everything bubble has reinflated. And yeah, because the US came out with 8.5% inflation, which is worse than being sandpapered to death. So the markets have rallied. Everyone's now getting complacent. It's a dead cat bounce. I know animal activists will be all over me, but let's come up with a different saying. But this is a time to sell some stuff, take out your trash, and look at overvalued stocks that have recovered on the way to money and get the hell out. But you've got to look across the boards. You look at small cap stocks. You look at anything ending in IUM. You look at the crypto market. That's all had a bit of a bounce. So, and we all know that a lot of these things are Ponzi schemes. So yeah, it's a bull trap. It's a dead cat bounce. Markets are going lower. There's no real impetus. Once you've got 8.5% inflation, and they're now calling stagflation, which is it's an inflationary recession, which we had back in the 70s. That's just the worst economic times you can have, but good for gold.
Well, good for gold. And it's interesting. I think that gold is still not showing its metal. It's almost like they want to shake the lazy hands out. They want to shake the, I guess, the fear out. And those that are strong and are investing in decent companies will stay the course. But Tony, Ponzi schemes. I think I'll call you on that one. What are you calling a Ponzi scheme? 19,000 shit coins. Yeah, okay.
And all these fraudulent companies taking people's money and then rug pulled going broke. If people want to learn what this culture is, look at Coinfessions on Twitter. It's just, people are just drowning in dopamine. There's fraud everywhere. And fraud is normally a sign of irrational exuberance / FOMO. Sure, there's some that are going to go up and down, but most of it, the culture is horrendous. And I feel sorry for kids that log in, see all these women that are 6 to 9 on looks saying, good morning, I'm a woman of crypto. If it wasn't for crypto, they'd be sharing a unit in LA with 11 others trying to go to auditions. I just think this whole culture is disgusting. When you look on the fringes, sure, there are some ways to make money, but I just think it's gotten out of hand. So that's a Ponzi where people are paid out by new people's money. I was actually reading the history of Charles Ponzi, and people were rushing to hand him money in Boston, and he actually sued a newspaper that said he was doing the wrong thing. So look, the best Ponzi schemes can go on forever, but I don't care what anyone says. People can buy low, sell high, whatever asset. But I think for a lot of things, you're better off having a sports bet at. So anyway, there's a chance to take out your trash, Kerry. But
Yeah, don't talk to me about the sports bet app. I did a little bet on my son has a horse. He's in a syndicate called She's Got the Boom.
ooh.
She didn't boom, she bust. But luckily
Oh,
I didn't bet the house on it, Tony, so it's all okay. But would you call some of the smaller, more speculative, small cappy type areas that we play in a little bit speculative? And it's not a Ponzi scheme, but it's very early stages, so it is specky.
oh, absolutely. Of course they are. That's what the old penny stocks are. You've got. I remember during the tech bubble, I was a broker. I had my seats license. People were putting fake orders everywhere. Then they'd do the rug pull. They'd pull that order, or they'd go undisclosed, or they'd build sell volume when they didn't have any stock to sell. People are, if they're not smart, they're inherently naughty or do illegal things. So yes, a lot of the stocks on the ASX, I can't name them, but they're stocks designed to cash in on a bandwagon. But our market is heavily regulated.
Yeah.
You could just buy a lifestyle stock and they'll raise money, they'll jump on whatever's hot ending in IUM, and you can get the hell out. But generally you can hold that portfolio of rubbish, lose money for 5 years, and then you learn. But when you go into something that's unregulated, driven by criminal interests, you can lose 100% of your life savings. And it just breaks me that people are going to the fast buck. So
Yeah, they
I
are.
was just at the gym. I sat there on the exercise bike and I was watching a documentary. It's called Becoming Warren Buffett. And unfortunately, a lot of the youth today can't sit there and watch their 2-minute noodles take 7 minutes to cook. And they're just drenched in dopamine, instant gratification. What you've got to do, it's like spam. Scrape off all the crap on top and just get back into value investing. And I think that's where the world's going to head. But we're still going to have tattooed NFT artists dominating the internet. And anyway, that's my view, Kerry. And yeah.
It's interesting you said that, because when I was over, one of the things that Rick Rule talked about was before the conference even started, take notes, take lots of notes. He said, you're here to learn. And I learned a lot. I got a ton of notes. But one of the things that came up, which is when you talk about 2-minute noodles, Rick said 10 baggers can take 5 to 10 years. So stop thinking 90 days and start thinking 5 to 10 years. And you're right, that instant gratification where people go, I want my stock to go from, 2 cents to $5. Well, you don't even know what the company does. I will take issue with you, though, on the IUMs, because I know what you're talking about. You're talking about lithium, and I know you don't like it, but there is a market for it.
Oh, and absolutely. And we saw the snapback from Lakes Resources in particular when J Capital went short, launched their report,
terrible.
and they're charcoal chicken at the moment. And yes, all these stocks were getting belted. Those that could hold on, that went against their trading rules, have done exceptionally well because markets have snapped back and the money flow went straight back into them. And that's fantastic. We need confidence in those stocks. And what Goldman Sachs and J Capital did was erode it. Are these companies worth their market caps? Hell no. Hell, of course they're not. But there you go. You have the right to buy low and sell high. So I just think it's a confidence thing. And finally, we've got some confidence back into the small caps. But remembering, a lot of these companies aren't going to produce anything except for brokerage and broken dreams. And I went back through some of my notes. I was involved in the 2008 lithium bubble, and we had 2 stocks to choose from, and we bought Orocobre because they're looking at hybrid vehicles. So I just think that, yeah, it's great with the money flow. We fluked a lithium stock early, which was Kidman Resources, which gold. They ended up getting taken over by Wesfarmers. God knows, I think it was a couple of bill.
Yeah.
But there's a saying that sometimes to be successful, you've got to sit back and watch other people make money. And that's what I'm happy to do at the moment, because my team is building fitness. one of my companies came out with probably the best news a biotech could have about a week ago. And to me, I'm saying to my clients, we are living in a multi-bagger. Here's your test. It's not going to happen straight away, and there's some hurdles, but once you're in it, it's actually quite difficult. And it's much easier to watch all these stocks go through to the stratosphere in hindsight. But when you're involved in one, sometimes you've got to put the stock away. You've got to take up golf. You've got to take up something. So, you know, I'm just going to sit there on an exercise bike and watch documentaries on Buffett, and my other favorite dude in the market, Peter Lynch.
Peter Lynch, who's he?
He wrote One Up on Wall Street.
Ah,
which arguably is probably the best investment book ever written. So, but I know I'm getting back to basics, but people need to get right back to the romance of buying shares in industrial companies, biotech, mining, and just ignoring a lot of this pop culture, which is simply fronts for organized crime.
that's heavy.
I'll leave my claim at that. A lot
friend.
of it's organized crime. I'll leave it at that, Kerry. But let's try and help people make some money.
Great. So how are we going to do that? Because this is a bit like a rodeo. The horse will always try and shake you off, and you're saying stick with the decent companies that have got news coming out. So what's your advice at the moment? You said a moment ago this is a dead cat bounce. So should people be pulling out and having some liquidity to take the options when they come up? What's the best thing for people to do right now?
I think the dead cat bounce will run out of legs. Well, yeah, the cat won't bounce as high just because it was based on a disastrous inflation report, which wasn't as bad. We've got the Chinese economy's weak. We've got nut jobs running countries with nuclear weapons. It just sucks. But what I'd certainly be taking some money out. I'd be looking at some instruments, even take another look at the BBUS. Everyone got their dividend. That's weak at the moment. But yes, an opportune time to take profits and realize that some of these companies are going to decline in value. And I think with any situation, you just have to stick to the fundamentals. And what I've noted is in my early days, when I was interested in the market, I'd have my Oz text on the TV and it'd go through all the share prices. Now you've got instant access to it. But if you look at the returns back then, they're still just as good, but not as much volume and not as many trading gangs. So I think the underlying culture is still there where you just buy value, or if you buy rubbish, sometimes you're going to get lucky. So yeah, I just think that this is a sucker's rally. It's a time to lock in some profits.
You mentioned BBUS just before. Explain to people what it is and why you think that they should have some exposure to it.
This is a real difficult one. It's a negatively correlated ETF where for every 1% the S&P 500 rises, you will lose between 2.25%, 2.75%. But when it falls, you get that reverse. So these did exceptionally well. They actually paid out $1.12 distribution, but the S&P 500 has rallied and now it finds itself in the mid-8s. So it's probably another opportunity. I know people trade it. I keep it as an insurance policy just in case we do get the big one. And normally you end up with a big correction once everyone is complacent.
Do you think most people are complacent at the moment, Tony? It feels that way to me, that people really, I mean, I had a comment from someone recently that said, well, we're not really in stagflation. Everything's going fine. And, you know, unemployment's low. And I said, that's lagging numbers. They're not looking forward. They're looking backwards.
I think you've got to look at inflation across everything we buy. There's bugger all wage growth. We're going to have a raft of strikes upcoming. You look at nurses, emergency services. I know I'm an ex-cop. We always fought for a little bit more pay. I just think we're going to start to have some unrest. Restaurants are closing. They just can't get people. And the problem is that the average mortgage holder, just say New South Wales, owing $800,000, is being punished because some people have ended up getting a job. So the unemployment rate, and it's the participation rate, which is the key. So yeah, these people are being punished with higher interest rates, and the rate of that acceleration is just simply unheard of. And people then are going to go into their shells. Who's going to go and spend stuff? But people are saying, the spending's still going on, but you wait until confidence is dented. People will start to hang on to their cars that are perfectly good for the next 10 years. They won't go out and buy all this white good crap. I mean, the pages of Saturday papers now are just full of furniture and white goods. I mean, now is the time not to get excited about a new washing machine. People will start to rein in their spending. The streaming services will go. Kids will get yanked from private schools. There'll be a flood of
oh my goodness
Q5s on the market. It's coming. It's coming.
But why do you say that? Because Tony, look, I'm going to be blunt with you. You've been saying it for a while now.
Yeah, but I'm going to be right, Kerry. And
yeah,
at
but
the
everybody's
moment,
right at some point, Tony.
oh, ouch. Well, I think the scenario was halted due to a global pandemic, which I don't think one analyst put into their forecasts. And I think COVID has actually made things a lot worse. We've had,
in what way?
well, it's fueled the debt fire. And we had the RBA come out and say, it's plausible that rates won't rise till 2024. Now we've got 40% mortgage stress. So, and today ANZ came out and said they expect national house prices to fall 20%. That's a friggin' disaster when the RBA cash rate is predicted to get half its average long-term rate of 6.5%. Interest rates are normalizing as a result of inflation, which is like trying to hold a beach ball down at a public pool. Yeah. So, people can make their choice. If they think that a house in Sydney is worth 15 times earnings when the long-term run rate's 5 to 6, well, that's a delusion. But the black swan event, instead of delivering financial hardship, has delivered everyone a friggin' Saturday lotto win. So it's up to people to take it, I guess.
All right. So what you're saying at the moment is have some exposure to the market, bit of a dead cat bounce, be cautious, have some liquidity so that when the market does have a little bit of a turn, you can come back into the market and pick up some bargains because if it's a decent company, it will survive even a downturn.
They just have, a lot of these little companies will be forced to raise capital at lower prices.
Yeah.
That hurts. What really stops people from investing in good small cap companies is the fear of a placement, which is often worse than the placement itself. They employ someone. Oh, shit, they're going to need to raise money. They're drilling. Oh, they're going to have to raise money. I better not buy that. So there's lots of reasons not to buy some of these small cap stocks, but throughout all the noise, they are still going to increase in value if the fundamentals are good enough.
Yeah. Any particular sectors that you're liking more than others at the moment, Tony? I know you follow biotechs and resources, and is there one that you think is potentially a standout as we come into this, quite frankly, confusing and slightly volatile time?
Well, I'm a huge fan of the biotech sector. One of my core companies, Proteomics, came out with an announcement that Sonic Healthcare US are going to help distribute their ProMarker D test for diabetic kidney disease. That is huge news. The market yawned at it. They also had a 78% success rate with the initial test for endometriosis. So that massive news, the market again yawned. But what I'm seeing is they've just raised $8 million at 85 cents. That stock will get issued early next week. There will be some weakness. But for my liking, that company has built a platform where they're going to help diabetics predict kidney disease before it happens. It takes 7.5 years for a woman to be diagnosed with endometriosis. Marilyn Monroe had it. So this is a biotech company in the early stages where the growth is obvious, but people think, oh, it's obvious. I mean, early days, you walk into JB Hi-Fi, the staff with purple hair and tattoos are having a great time. They're really helpful, but look at the growth trajectory of that company. So some of the best investments are right there staring at you. My Radio Farm, another stock looking at brain tumors and cancer diseases, trading at 21 cents. Research report says 88. Chimeric, CAR T cancer company, got down to 9 during the tax loss selling, now trading around 13 to 14 and a research valuation of 93 cents. Sure, they paid for that research, but they don't see the valuation till the end. So I think there's great value in the biotechs. The gold sector, gold producers have snapped back beautifully. Gold price was over 1,800 US. It's still over 2,500 Aussie. My favorite mining stock, Maronan, is drilling at the moment in North Queensland, and Far East Gold, which is my Powerball company, have got a drill rig mobilized to Woyla, where no one said it could be drilled. That is the most ginormous drilling target I've been involved in. So lots of exciting stuff happening.
Yeah, love Far East Gold. And they're also doing some work on their Queensland projects as well. And I was talking to Michael Hudson from Southern Cross Gold. They've got their Sunday Creek project down in Victoria. Some standout stuff coming out of that, some great drill results. And, they don't need to go back to the market at the moment. That's another one. And I look, as you said earlier, Tony, sometimes when people are not looking, that's when you should be having a good look.
Well, you've got to look at BHP bidding $25 for Oz.
Yeah.
And people saying, well, what the hell they're doing? Because Olympic Dam hasn't really done that well for BHP. They need Oz Minerals' other assets, Carrapateena, Prominent Hill, to build a production hub, have some synergies, and hopefully get that project humming. But copper was absolutely smacked on the backside. It's since trying to bounce back. So it's pretty good that we're having this M&A activity, because value will be realised. There's lots of gold companies out there with stranded resources, and the majors there hasn't been any real huge discoveries. So instead of finding the ounces, why not buy them? And that lifts the whole sector, where they now get a bit of a takeover premium. So the M&A activities has extended to the tech stocks, even Tassel's getting taken over, the smoked salmon. So this market's going to be M&A driven. So as always something happening.
Tony, we're running out of time. Just briefly, would you say to people right now, keep that liquidity on the sideline? Would you put a percentage to it? Would you say 10%, 20%, 50% on the liquidity side? Because you said take out the rubbish, have some liquidity so that you can pick up opportunities as they come along.
Well, the issue is I tend to be fully invested. It's because I believe in my companies. Of course, I've got some emergency funds, but I think people need to really look at their own finances, where their education, their expenses, what they need to factor in, higher interest rates. They need to factor in a lower stock market and their expenses. So, I mean, I can only try and help people so much, but I guess it all boils down to your character trait. If you're the right character to slowly build wealth, not get sucked in, that's great. But if you're always checking your phone, you can't wait till the microwave dinner's done, and you can't hold an investment due to boredom, then it's not going to work. So I think you're either born with it or you're not. But what I'm doing with people is trying to teach them the right attitude, I guess.
And that's if people want to get a hold of you, Tony, how can they find you? And are you twittering away at the moment?
Yeah, I'm on Twitter, Tony Locantro. I don't hide. I'm starting another course on Sunday night. I said when I get to 10 people, it'll be great. I think I've got 8 people. So obviously it's huge interest in people trying to make money the slow way. But yeah, email me, Twitter. It's pretty quiet at the moment.
So Tony at altocapital.com.au.
Correctamundo.
Just tell me what you so if they want to join the course, what's the course about, and why? How would it help people that are wondering what's going on?
What I'm trying to do in 3 Zoom sessions is teach people what I've learned in 25 years, and what I've learned through dealing with thousands of people and getting to know how they think, how they react, which I think is probably one of the most valuable bases of information you can have. Since I've been dealing with fear, greed, and stupidity for the last 24 years. And what I'll do is on the program, I'll put together a hypothetical portfolio as to why, capital allocation, and more importantly, I'll talk about the excuses people use not to buy a stock and not to make money, and all of that. So yeah, I think another 2 people would be great.
All right. So if you'd like to join Tony's finance, what do you call it? Financial
it's not really a
course.
course.
Just send him an email. Send him an email.
Send me an email. But anyway, yeah, all good, Kerry, and great to chat as always. And I know we get a bit fired up, and that's brilliant.
Well, as I heard while I was overseas, if you want to be successful, hang around successful people. So don't hang around us. No, just kidding. This is not financial advice, though, ladies and gentlemen. Make sure you do your own research. These are crazy times, crazy markets, and make sure that you get professional advice when needed. Tony Locantro, Alto Capital. As always, I will now see you in a fortnight. We won't leave it that long.
Look forward to it. Thanks, everyone.